Hi there. If you're thinking about buying a home, especially in today's market, you're probably wondering how to get the absolute best interest rate possible. Well, you are in the right place. I'm Lisa Salt with Vernon Fowler, a BC realtor, and today I'm sharing 3 proven ways to secure the lowest interest rate possible when buying a home. Whether you're a first-time buyer or an experienced homeowner, these tips can save you thousands over the life of your mortgage. So let's dive in. The first and arguably the most important way to get a lower interest rate is by improving your credit score. Now, your credit score is like your financial report card. Lenders use it to assess how risky it is to lend you money. The higher your score, the less risky you appear to the banker, and the better the interest rate they'll be able to offer you. So how can you improve your credit score? Let's talk about that. Number 1, pay down your debts. Really focus on reducing high interest credit card balances and other debts.
When they call, I tell them I can't pay it back yet. Credit card debt.
Number 2, always pay your bills on time. A single missed payment can ding your score. Number 3, keep old credit accounts open. The longer your credit history, the better. So what I mean by that is if you have an old credit card that you think, I don't need it anymore, I'm just going to toss it, keep it going, even if you're not using it, or even if you use it just a little bit, because borrowing money and then paying it off increases your credit score over time. So a little bit means a lot. Number 4 is monitor your credit report regularly. Now, mistakes can happen, so make sure if you find an inaccuracy to dispute that. And number 5 is limit hard credit inquiries. So what that means is when a lender pulls up your credit score, say you apply for a credit card somewhere, and then you decide, you know what, I'm not gonna bother with it, I don't need another credit card. Well, that company pulled up your credit score. That's a hit on your credit. Every time someone hits it, your score goes down.
If they can find some
just a little bit. So limit that. Be careful with it. Because when they pull your credit for applications, it only lowers your score. Only apply when necessary. And here's one bonus tip. Avoid applying for new credit or loans right before shopping for a mortgage. Those hard inquiries can temporarily lower your score. So give yourself a few months to let your credit settle before applying for a mortgage. And now let's talk about shopping around for lenders. This is the second tip. Shop around for the best lender. Many buyers make the mistake of going straight to their bank that they deal with or sticking with the first lender they find.
You see, Mr. Griffin, what sets us apart from other banks is that other banks are banks. Now, I trust you have collateral.
But did you know that interest rates can vary significantly from one lender to another? Here are a couple of options. Okay, 1, there's the banks. They're often the go-to for many buyers. Like it's a high percentage, 70 or 80% of people just go straight to their bank. But that bank may not always have the lowest rates. Banks can also offer loyalty discounts if you're already a customer, so ask for that. Number 2, check out local credit unions. Now these are member-owned institutions and they often have competitive rates and flexible terms, maybe more competitive and maybe more flexible than your bank. They may also be more willing to work with borrowers with unique circumstances, so check out the credit unions. Number 3, and usually the best option for your best rate, is a mortgage broker. Brokers have access to multiple lenders, usually many lenders, and can often negotiate better rates on your behalf. They're also great at finding specialized products tailored to your needs. So here's a pro tip for you. Get pre-approved by multiple lenders and then compare not just the rates, but also the terms. Sometimes a slightly higher rate with better terms can save you more in the long run. And don't forget to ask about hidden fees, prepayment penalties, and other costs that might affect your overall loan. Also, you know what? The other thing, timing matters. Interest rates can fluctuate based on the market, as we know, and economic conditions. So keep an eye on trends and act when the rates are favorable, and then choose either a variable or a fixed rate depending on where interest rates are at that particular time. Now, before we move on, if you find these tips helpful so far, give this video a thumbs up and subscribe to my channel for more real estate advice because we're posting new videos on this channel for you buyers and sellers every single week. And if you're looking to buy a home in the North Okanagan Shuswap, our group at RE/MAX Vernon Fowler would love to help you navigate the waters. Reach out anytime. Now, number 3, consider your down payment and loan term. The third way to secure a lower interest rate is by strategically planning your down payment and the term of your mortgage. So number one, increase your down payment. The more you can put down up front, the less you need to borrow. So lenders often reward larger down payments with lower interest rates because you're less of a risk. For example, in Canada, putting down 20% or more can save you from having to pay for mortgage insurance, and that adds up over time. The second thing is, how about shorten your loan term? Most times, 25-year amortization period is considered common in Canada. However, if you opt for a shorter term, like maybe 15 or 20 years, that could lead to lower rates. Yes, your monthly payments will be higher, but you'll save a ton in interest over the life of the loan. How about looking into rate buy-downs? Some lenders offer rate buy-downs when you can pay an upfront fee to secure a lower interest rate. This can be a smart move if you plan to stay in the home for a long time. Sometimes you can even negotiate a buy-down with a builder or developer if you're buying a new home, new construction. Another thing to consider is whether you're getting a fixed rate or a variable rate mortgage. I know I talked about this a second ago or a minute ago. Fixed rates give you consistency, while variable rates often start lower, but they can fluctuate. So discuss these options with your lender or broker to find out what's best for your financial situation and for your comfort zone. Here's another pro tip. Don't forget about incentives for first-time buyers. Programs like the First-Time Buyer Home Incentive in Canada can help reduce your overall borrowing costs. In fact, why don't you have a look at our video called First-Time Homebuyers Guide, How to Raise a Down Payment in BC, Strategies and Tips. And here's a bonus tip, number 4. Talk to an agent who understands how to get you the lowest rate. We do this every day, day in, day out, and we're free to you as buyers. Take advantage of that. Take advantage of our knowledge and our connections. We can help. So there you have it. 4 actionable ways to get the lowest interest rate possible when buying a home. Quick recap: improve your credit score by managing your debts, paying on time, and monitoring your credit report. 2, shop around for lenders, including banks, credit unions, and brokers. Compare those rates, terms, and fees. Find the rest deal. 3, strategize your down payment and loan term to maximize savings, and consider options like rate buy-downs and first-time buyer programs. Remember, even a small difference in interest rates can lead to big savings over the life of your mortgage. So take time to prepare and explore your options. Now take a look at our next video for first-timers like yourself, First-Time Homebuyers Guide, How to Raise a Down Payment in BC. It will actually start playing automatically next. Thanks for watching, and I'll see you in the next video. Happy house hunting.